Now, why do you need these international financial bodies? Need to understand. You see, when you are operating across borders, the point is like every country will have their own rules and regulations. But when you have international bodies, means where every country may be a member. So what you can get is like these institutions may bring in standardization for everyone. Now, standardization means same set of rules, same set of documents. Let's say I'm a loan manager and I'm supposed to give loan to some of my clients. If you go to different banks, you'll find different set of documents. What if every bank is giving you same set of documentation? It will be very easy, will be comparable, will be manageable, means across institutions. Let's say you shift from one bank to another bank, because every bank is having same sort of documentation, it will be very easy. Okay, so this is the rationale for bringing in standardization across countries. So these international institutions, what they'll do is like they'll have their membership. All countries will join them. They'll create their rules. These rules are created taking the reference from different countries. Now you see, experiential learning is what they're trying to enforce. Now I'll give you some examples. Like you see, in 1990, India went through economic crisis. Then you had Dubai real estate crisis. Then you have a European debt crisis. Yani you see there, your debentures issued, like you see, rather than debenture, calling them debenture, these are bonds. Government bonds were very close to, like you see, default. Greece was the first country where it happened, and then you switch to subprime crisis of USA, which happened in 2008. Now, you see why I'm calling all these crises into your classes. Like we cannot wait for a crisis to happen in our own country to learn it. So what is happening in this area is like you see these international institutions have their exposure everywhere. They're connected to different countries through membership. Now, when you have members all across, what you can do is like you can get the feedback from all your counterparts, all your partners, and then you can draft certain policy documents. Now, you see these documents will be having wider acceptance by all your members. Now, let's start with it. Some of the international institutions that we are going to cover, I'll try to name all of them, but we'll be bit more like we'll discuss the two institutions that have been there mentioned in your syllabus as compared to others. Now, you see, let's go in. The first agency which is coming in is International Monetary Fund, IMF. If I ask you, like you see in our neighborhood, earlier it was with Sri Lanka, now it is with Pakistan. What what do you make out from these two countries? Like both the countries are having a very serious economic crisis going on in their country. Their rupee, their currency value is is depreciated like anything. Inflation is severely impacting their their people in these countries. Now you see, you need to have some stability. If you see what is the main role of this agency called as International Monetary Fund, IMF. If you go through this para, let's read what is there. IMF is an international organization that promotes global monetary cooperation, financial stability, and sustainable economic growth. Now you see both Sri Lanka and Pakistan, they are member to IMF, but still they are struggling. Why? Because IMF is an international body. Their main role is to bring in stability for your currency. When I say currency, means Pakistani currency or Sri Lankan currency. Whatever currency you have in your home country, this agency will try to bring in stability. Now you see, globally, if you look at, you'll find world's 90% of your trade is being done in dollar. Now dollar is your main currency, but what about other currencies like Indian rupee and like Pakistani rupee and Bangladeshi taka? Now you see these currencies are not widely accepted in market. The major currencies that we have is euro, yen, pound, and dollar. Now these are the four major currencies. So if you have any trade across the borders, most of the time you will find these four currencies in usage. Now you see other currencies are there in existence, but their demand and supply may be there, but demand is not there. Hence you see their valuations are not strong in international market. So here IMF will try to step in whenever there is a crisis related to currency in any country. Now, Pakistan, Sri Lanka, both are running into a crisis. So, what IMF is trying to help, you see, because they all are member nation to IMF. So, IMF will try to suggest them some of the reforms that they need to have in their country, so as to bring in some strength in the local currency. Now, you see, most of the time these suggestions and reforms are very strict in nature. Like you have to cut down your unnecessary expenditures. Um, let's talk about India. Now you see, farmers are given electricity in certain states which is free of cost. No doubt, I know this is important. Farmer, 70% of our population, if not 70, then somewhere near to 70% people are working in agriculture sector. And agriculture sector is a very, very like distressed sector in India. Why? Because you see, you depend on climate, you depend on monsoon, and this thing can change anytime. And like you see, farmers can go into a distress. Now you see, if you don't support farmers with cheap loans, you'll not be able to have farming in your country. Now you see, when we are giving subsidy to farming sector or we are giving electricity to farmers, what is happening is like our overall, this leads to expenditure. Countries, this increases a country's expenditure. Now you see, when you are having extraordinary expenditure, and again now in this situation, your country currency valuation is going down. Now you see what IMF is going to suggest. IMF is going to suggest for some strict measures. Don't give free electricity. Don't give, like you see, government job must be there, but you should not have, like you see, better you bring in contractual jobs where you don't have long term obligations. Now you need to cut down your cost and you need to increase your revenue sources. Now you see, same is what IMF is suggesting it to Greece. They are suggesting it to Sri Lanka. They are suggesting it to Pakistan. Implementing such policies are very tough. You see, if you don't implement their policies, they'll not be able to help you much. They may give you one tranche. Tranche means one installment of loan. They may give you second installment of loan. Loan means, you see, you need, because your currency is not good enough, and you need dollar, so that you can sustain your economy. You can sustain the trade, like you see, the imports that, yeah, you require for your country. Like India is heavily dependent on Middle East for crude oil. Okay, crude oil is one necessity of ours, which we are fulfilling it from outside. So we have to pay to these foreign countries in dollar term. Imagine my currency value is not there, and I don't have foreign exchange reserves. Luckily, I tell you, luckily right now India is very, very stable, very, very stable as compared to our neighbors. You see, every country is going into a crisis, but if you look into India, our foreign exchange reserves is near to 600 billion US dollars. 600 billion US dollars is too much. Is too much means, in our history we have never been able to achieve this value, this valuation. Now you see, if you have foreign exchange reserve, what it means, you need not to rely on any external agency like IMF. Now what IMF is suggesting is, like, when IMF is suggesting, they are suggesting you some strict norms. Now they are helping you with foreign currency loans. When you get foreign currency loans, you get some sort of stability. But you see, if you don't change your system, the same problem will continue, will again be into distress. So IMF main role is to bring in stability for your local currency, okay, as compared to other international renowned currencies. The next agency that we are going to look at is, like, you have International Bank for Reconstruction and Development. Now you see, what they do is, like, they are giving you term loan. IMF is not giving you loan. IMF is giving you support in terms of foreign exchange. If you need foreign exchange, they'll give you foreign exchange. Why are they giving it to you? Because you are a member to it. You are a member nation. You have paid your membership fee. Huh? So hence they are under an obligation to support you whenever there is a crisis going on in a country. But you see here, if you need loan, you have to go for IBRD. The next agency which is coming in is like Bank for International Settlement. This is again an important agency from your syllabus perspective. The role of international, this Bank for International Settlement, is to make sure, you see, you have remittances all across the globe. uh, when you do trade, you are bringing in or you are sending something out of country. Now you see, you need to trade in for different currencies altogether. So Bank for International Settlement is ensuring that you do have a platform through which all central banks are interconnected to each other. They are sharing information, and they are also creating policies for cross border issues, so that you can deal with them very easily. Now you see, India don't have good relation with Pakistan. India don't have good relation with China. Now you see, if we have these issues in our mind, you see, it's very tough for our business houses to do trade in Pakistan and China, and similarly for them. So it's better we bring in an institution which ensures that across borders, whatever businessman, they are trying to do some transactions or financial transactions or some investments, they are allowed to do it. Okay, they are allowed to do it, and there are some platforms through which you can raise your grievances if there is a problem. Okay, so mainly all central banks are connected to Bank for International Settlement. They create policies for fund transfer. Now you see, one recent incident is like this: Russia and Ukraine war is going on. USA is supporting Ukraine, and you see USA is a very big bully in global market. So USA is bullying Russia. How? They have blocked Russia's fund transfer facilities. Like you see, there is a facility called as SWIFT. Okay, like we do transactions in India, these transactions are called as NEFT, National Electronic Fund Transfer, or you do RTGS, real time gross settlement. Now you see, funds can be transferred very fast. Okay, there is a modus operandi, there is a mechanism in place. Similarly, for your global remittances from one country to another country, you do have a system called as SWIFT. Now you see, Russia is also a partner in it. Many Russian banks are again using this facility to sending funds out of their country and also receiving it for their exports. Now you see, when USA has blacklisted Russia, and you see what is happening is like Russia is not able to use this SWIFT facility anymore. They have to do it with other countries like India, Iran, bilaterally, means one to one they have to do it. You cannot use your international channels. It is only when there is a problem going on. Now, for other countries, there is no issue. So, Bank for International Settlement will try to bring in a platform where every country can connect to each other. Now, in next agency which is coming in is like International Financial Corporation. Now, you see, you must have heard another agency which is a local agency, State Finance Corporation. Now, Punjab State Finance Corporation, Haryana State Finance Corporation, they do have. I have been there in search of my summer internship in my college days. Now, you see, these are government agencies who are there to support local business institutions. They are trying to facilitate local players state-wise. Okay, now you see here it is International Financial Corporation means they are globally renowned agency. And if you want to have some sort of investments or you need some financial requirements, so this agency may help you depending on your eligibility and your like what sort of prerequisites are there. Okay, so you see this is again another agency, one of them. Then in Asian region you do have another agency called as Asian Development Bank. BRICS Bank is also into discussion. Brazil, Russia, India, China, they are, and South Africa, they are coming up together to create BRICS banks. BRICS Bank is not there in my slides. So this is for a particular region. Asian Development Bank is working on Asia Pacific region only. So if you need loans, you need grants, you need technical assistance. Now you see, technical assistance means they are not only a bank which is helping you in financial assistance. They also send their technical team if you need any. Now you see, like currently, I gave you the example of Sri Lanka and Pakistan. Their ministers, their own internal ministers, are not able to bring situation in under control. So in this situation, you need an expert team. So you see, these developmental agencies, these apex bodies, these international bodies may help you by sending a team of experts who can give you advice so that you can come out of these types of financial crisis. Okay, let me go forward. Now you see, these international financial institutions have certain roles and responsibilities. Let's be very precise. First is promoting economic stability. You see, currency is what was a major role of IMF, and then World Bank, IBRD, they are giving term loan. Term loan means 20, 30-year loan. Now you see, I remember when I was reading Economic Times earlier in my college days, and I found that state of Punjab is borrowing it from World Bank to build up your irrigation facility. Now you see, canal irrigation facility. From here, if I go to Chandigarh, near this place called as Ropad, the entire road is actually connected to, side by side there is a canal running there. So you see, state of Punjab has borrowed it from World Bank. Now you see, this type of facility, if it is available, will not only support your states, like this is some sort of capacity building exercise. They are helping you to build your capacity to utilize your existing resources well, and you see, this will somehow improve your productivity and the total GDP of your country. Next is like facilitating development. Now you see, all these financial institutions' main aim is to have financial and technical assistance of developing nations. You see, developed nations are already developed to almost full extent. Go to any developed nation, Australia, you have Canada, USA, Germany, Japan. There you don't see any scarcity of resource, and you will find everyone having the best infrastructure. Now you see, there, if you see Indian kids who are going to these foreign nations for education purpose, after a couple of years, they people are owning very luxury, very luxurious cars. Now, how it is possible? Because there it is very common. Any infrastructure and your facilities, resources are available to everyone. But there is a cost for everything. If you can afford, you can get everything. Now you see, there you have everything. But in countries like India, you see, there are still some areas which are underdeveloped, untapped. If you go to Africa, Africa is totally, African subcontinent is totally untapped. You have lots of opportunity, but side by side, you need to look into other factors also, which brings in investment. Like if you don't have law and order situation in control, if you have political instability, economic instability, these all factors will bring in a disturbance. Okay, and hence may lead to a negative development. But here, what we are discussing is like these are international financial institutions who are going to help you with your development. Okay, setting standards, you set up rules like Basel norms. If it is created at center once, then every country has to follow it. Need to understand. You see, let's say I'm a teacher and I do have 60 people in my class. My rules that I'm going to use for my class are going to be same for everyone. So once they are set for everyone. Now I'll bring in a paradox here. You see, there are countries which are split into three categories: developing, developed, and least developed nations like African subcontinent. You see, you have countries in African subcontinent which are very, very backward. Technology is not there, where people are dying due to hunger. And you see, how can you expect every country to follow same set of rules? Now, this is my paradox. What I'm saying. One side, I'm saying these agencies, international bodies, are bringing in same rules for every country. Second side, I'm saying how can it be possible bringing in different like different type of countries on a common platform, same set of criteria to be followed is very, very tough. So what we can do is like we can allow certain exceptions to countries who actually need them. Okay, let's say for developed nations, implementation date is for like let's say next 6 months. But for developing nation, it can be for next 6 years. For least developed nations, it can be for next 10 years. Now, depending on your situation and your background, you see, you can be given certain extensions. This is what is the for policy for various international financial institutions, especially for Basel norms. BIS is doing it. Okay, till date, Basel Guideline 1, Basel Guideline 2, Basel Guideline 3 is already framed and is into circulation. Banks are following it up. Now, Basel 4 directions are into formulation mode. Okay, what is there in Basel 1, 2, 3? We'll study in future course of content. Today, if you want, I can give you a short brief. In Basel 1, banks were able to figure out the risk called as credit risk. In Basel 2, banks were able to identify the other two dimensions of risk, which is operational risk and market risk. And in Basel 3, they brought in some supplementary reserve requirements for banks so that in case of emergency, banks should not go bankrupt. So they have just built, they have brought in extra cushion for banking sector by making certain special provisions and reserves which are meant for emergency situation. So we'll be discussing it later if there is an opportunity. Now you see, next thing is like fostering cooperation. Now you see, because it is an international forum, every country is a partner there. So every country can bring in their own local issues so that when there are certain policies in formulation mode, so you see, you can give consideration to all the issues which are addressed by, like you see, these are issues of communities across the globe. They can be used for formulating new policies. Now next is like you see, these international agencies have certain governance and decision making processes. Okay, so everybody has certain, like you see, inbuilt mechanism. So multilateral governance, what does it means? Like institutions like IMF and World Bank are governed by multilateral bodies with members who are representing different countries and different boards. Like let's say we take an example here that there are approximately 200 countries in this world. So 200 countries are being represented by their country representative. Like for India, it is Reserve Bank of India governor who is going forward. Similarly, for UK, it is Bank of England governor who is going to go as a representative of England. Now you see what is happening. So when someone is representing your country in this platform, so you see, we are having a global platform with global issues which are put up together to create new rules, and hence it is called as multilateral governance. Not a governance by one, but it is multilateral. Means every country has say in the policy formulation process. Next is voting rights. Voting rights are usually given according to the size of the country, financial contribution. Now, when I'm saying it is, this is true in context of IMF. You see, in IMF, there is a particular thing that you need to understand. India is a member to it. So, in order to be a member of IMF, you have to buy special drawing rights. Yani, you have to buy your membership. You must have heard this. Huh? You do have a club in your city. This club, Rotary Club or some club, you do have different types of membership. One is a silver membership, second one is a gold membership, and third one is a platinum membership. Now, according to the class of your membership, you have to pay a membership fee. Let's say for silver, you pay 500 rupee per month. For gold, you pay 1500 rupee per month. And for platinum, you pay 5000 rupee. Now you see what is happening here. Similar sort of mechanism is there in IMF also. In IMF, every member nation has to buy special drawing rights, SDRs, from IMF. SDR is an instrument. Special drawing rights is actually an instrument issued by IMF and bought by various member countries. So you give your payment and you get these SDRs. If here in you see in IMF, it is not like one person, one vote, one country, one vote. This mechanism is not operational. In IMF, policy is like if you have a bigger share, you will be having bigger voting rights. Okay. So let's say USA is the biggest, like you see, buyer of IMF SDRs. So USA standalone can take a call. You don't need all 200 countries to come up together. Like in UNO, it is totally opposite to what is there in UNO. UNO 200 countries means there are 200 votes. Every country will have only one vote, irrespective of your financial background. But in IMF, it is not the case. Hence, what I'm saying is, when you're taking your membership from IMF, you can get some facilities to borrow money from IMF in times of emergency, like Pakistan and Sri Lanka case right now going on. But it depends on what type of contributions have they made in pasts. Like I bought SDRs worth 500 crore rupee. So if I need a help from IMF can help me up to 400 crores only. Imagine, you see, this is what is a limitation in IMF. IMF will give you a support only up to a certain extent. They will not take extraordinary risk dealing with you and your case. Okay, so this is again not fair, but there are certain limits to everything. Next is transparency and accountability. When you operate in an international agency as a member, you need to follow rules. You have to be transparent. You have to share your reports. You have to share your documents. You have to show your portfolio. Now you see this is happening. Why? Because you do have some global institutions in presence. Next is consensus building. Anything that you do has to be like in coherence with other member nations. So we work with majority, not with minority. So consensus building exercise is going on. So every country has a right to share their feedback and their thoughts. And after listening to their thoughts, then you can create your policies in discussion. Next is challenges and criticism. Lack of transparency. Sometimes you don't find transparency in these international bodies. They are mainly inclined towards Western countries, and maybe you see other nations may have some limitations or they don't have the exposure. Next is like you do have representation concern. Like developing countries always argue that they are underrepresented in governance issues. That is what I was saying. Key like countries like USA, Germany, Japan, UK, they may have a dominating position there, and hence whatever they say will be final. Developing nations from Europe, not Europe, from African subcontinent may have their reservations. Like maybe even if they collectively are saying something, but you see, uh, their concerns are not taken into account. So this may happen sometime, occasionally, depending on what theme is being debated. Environmental impact. You see all these projects because they are funded to you by an international agency. Hence, you have to follow global norms set by these agencies, and you see they are the best when it comes to global norms. So, environmental and social consequences is again kept into count.
You have 5 minutes remaining.
Okay, so let's go forward into financial institutions. Future of financial institutions. You see, technological advancement is happening. Blockchain technology, cryptocurrency. These things are actually taking over. So even though you see, these financial institutions are actually going to be the role model for everyone. If they endorse any such technology, then you see the utilization of such technologies will be widely there in market. But if they restrict some of the future products, then similarly you will find reaction from market. Next is sustainability focus. Now sustainability means, you see, do whatever you want, but make sure it is sustainable in nature. Now you see, sustainable means it should not be only financial, or in economic terms you take a call. It should be environmental friendly also. It should be social sustainable also. Means it should not be damaging your overall ecosystem. So last is, like, you see, these institutions have a bright future. Why? Because they are enabling wider collaboration. Now you see, now you do any event, you do have partners from all across. So once you have more and more partners, like, I'll name couple of events like Global Money Week, and another concept is the investor global investor week. So these are couple of events which are being celebrated all across by OECD, and all these 200, approximately 200 countries are participating in such events. So it is like, you see, they are bringing in global phenomena. So this is all about our first round of PPT discussion today. Let me stop.